Welcome back. Today we're going to dive into the LotusBee Wealth Daily Report. This one's from July 8, 2025.
Right.
Our mission, as always, is to pull out those key financial insights, figure out what's driving the market.
And what it actually means for you.
Exactly. And this was a day, well, felt like caution mostly, but with some surprising bursts of activity.
Definitely some specific areas popping.
Okay, so let's unpack this, starting with the major indexes.
Sounds good.
The S&P 500, it dipped a bit. Closed at 6,203.40, down, about 0.18%. Barely moved.
Yeah, pretty much sideways. And the NASDAQ 100, 552.34, basically flat too, just a 0.08%. Tech holding steady, mostly.
Right. The Dow Jones Industrial Average, though, that lagged a bit more, down 0.37% to 4,423.80. But here's the interesting part. The Russell 2000, small caps. It gained 0.71%, hitting 2,212.50. Clearly outperformed.
Yeah, that's the real story within the indexes, isn't it? And what's fascinating here, looking at the market drivers section in the report, it points squarely at these renewed U.S. tariff threat headlines. That seems to be the main thing weighing on sentiment.
Okay, like what specifically? I remember seeing those.
Well, we're talking proposed 25% duties on Japan and South Korea, and then a really hefty 50% tariff potentially on copper.
Wow, 50% on copper.
Yeah. And hints of future levies on pharma and semis, too. Now, that August 1st deadline, they mentioned it was extended.
Right, so not immediate panic, but
the uncertainty is absolutely lingering. You can, feel it. And it connects directly to the dollar strengthening again, second day.
And Treasury yields ticking up.
Exactly. 10-year yields rose for a fifth straight day. That often happens when trade tensions rise or there's inflation worry.
Right. And you can really see how those big macro drivers filter down into specific sectors.
For sure.
The Dow, for instance, getting dragged lower.
Yeah.
The report mentions bank and financial shares specifically.
Yeah, there were some HSBC downgrades mentioned, plus those firming yields you just brought up.
Yeah.
That tends to squeeze bank margins sometimes, put pressure on that sector.
But the NASDAQ, it sort of held its ground, didn't it?
It did. Impressive resilience, really. It felt like this balance between general caution in tech, maybe some profit-taking, but also continued strength, especially in chips and, AI-related stocks. Investors are still finding pockets they like there.
Picking their spots.
Exactly. And if we connect this back to the bigger picture, that Russell 2000 outperformance starts to make a lot more sense.
How so?
Well, in this kind of environment, with global trade worries flaring up, the report suggests portfolios rotated. They favored these domestically focused small caps.
Because they're less exposed to international tariffs and sort of global political winds.
Precisely. They're seen as a bit more insulated. It's a classic defensive rotation when global trade gets choppy. And it raises an important question for you, the listener. How quickly do you see global trade policy shifts, like these tariff threats, immediately change where investment money flows towards domestic assets in this case?
It's quite a direct link, isn't it? Almost instant sometimes.
It really can be.
And speaking of sharp reactions, wow. The report flags some other major highlights, that copper move you mentioned.
Oh, yeah.
A surge of about 13%. That's its biggest spike since, 1968? All just on the news of that potential 50% tariff.
Incredible, isn't it? It just shows how sensitive commodities can be to policy headlines right now. A huge historic jump.
Yeah. And meanwhile, the VIX, the fear gauge.
Still elevated. Around 17.8, the report said. So it's not like we're seeing full-blown panic.
No, not peak fear levels.
No, but it definitely reflects that simmering uncertainty. Traders are pricing in more potential volatility, keeping hedges on. There's anxiety under the surface.
Okay, so bringing it all together, what's the LotusBee view synthesis here?
Well, fundamentally, markets are kind of treading water. They're digesting these renewed tariff threats, the whole trade policy risk landscape. But importantly, small caps outperformed, and tech held pretty firm. So it's not uniform selling. And that copper rally, it's just a huge reminder to stay alert to commodity volatility, especially when it's directly linked to policy news like this.
So the markets basically pause, but maybe, precariously.
Yeah, on a high wire is how the report put it, especially with that August 1st tariff deadline, even if extended, still kind of looming out there.
Right. So just to recap the core dynamic for everyone, it seems pretty clear that policy news, particularly these tariff threats, is really the main force pulling the market strings right now.
Absolutely. That's the central theme.
So looking ahead, what should folks be keeping on their watch list?
Okay, so definitely monitor for any more clarity on those U.S. tariff actions, versus Japan, South Korea, and specifically those hints about pharma and semis.
Yeah,
Any details there will matter.
makes sense. What else?
Also, keep a close eye on the Fed minutes coming out tomorrow. With the inflation and jobs data being a bit mixed lately, any clues on the rate path will be scrutinized.
Always important.
And finally, just track the Treasury auctions and yield movements. See how the bond market is absorbing all this risk. It tells you a lot about broader sentiment.
Good points. So maybe a final thought to leave people with.
hmm
Just consider how quickly one single policy announcement, even just the threat of a tariff, can totally reshape market behavior, like that historic copper spike.
Yeah, it's powerful.
What does that tell you about how interconnected global policy and daily market moves really are? And maybe more importantly, what will you be watching most closely next?